Hello everyone. So we are back with the subject accountancy, and this is the 6th lecture for this subject. In previous lecture we have understood about the definition of transaction, its types and event. Yes? So hope you all are good and you have been watching this video lectures on regular basis, and I hope you have been making good efforts to study the subject. Yes? So let us continue with the same chapter, that is chapter 1, accounting and its terminology that we have been doing from past few lectures, and today is the 6th lecture for this topic. Okay. So we'll continue with the terminology of accounting, and the definition that we are going to learn today is, please take your textbook, and the definition of capital we are going to start. Yes, capital, an important word. So first of all, to understand this concept, consider yourself as the owner of the business. That means you are a person who is willing to start a business. Okay? If I'll consider this from my point of view, I'll consider as I am going to start a business activity. Yeah? So what do I need first of all? You'll say money. Of course, yes, money is required everywhere for any sort of activity, and when you need money for commencing a business, it is capital. The important term of all, capital, it is an investment made by the owner. Okay, an investment made by the owner to commence business. This is the definition of capital. It says it is an investment made by the owner to commence business, to start business. Yes? So any activity that you want to do, yes, you need several factors, yes, of which the very first thing is capital. So anything that is brought by the owner, yes, any sort of investment that is made by the owner to commence the business activity is known as capital. Yes? So it can be a cash, either any sort of asset. What is an asset now? Yes, this will be explained to you further in the lectures. So in short, for now, you are supposed to understand that anything that is brought by the owner to commence business is capital. This is the definition of capital, which is also given in the textbook. I'll read it. An investment made by the owner to commence business is known as capital. Investment in business is done in cash form or in the form of any asset. All those items are included in capital, which is provided by owners, and their value is measurable in terms of money. Owner can bring cash, either can also bring any sort of asset. In short, anything that is brought by the owner in the business, yes, is termed as capital. Yes, say for example, the owner brings cash of rupees 10,000, furniture of rupees 5,000, stock of goods of rupees 10,000 to commence business. Yes, there is also an example in the textbook given to you. They say to commence business, owner has brought rupees 10,000 cash, furniture of rupees 6,000, goods of rupees 8,000. So what is the capital of the owner? You will add these things. Yeah. 10,000 plus 6,000 is 16,000 plus 8,000 is 24,000. Yes. So what is the amount of capital invested by the owner? 24,000. Yes. Consider you are the owner and you have invested rupees 24,000 in the business. So what is the capital? 24,000. Yes. Now comes the second related thing to capital, that is drawings. Yes, drawings. Any amount that is withdrawn or taken by the owner from business for his or her personal use is drawings. Say for example, you have taken rupees 4,000 from the business for the payment of fees of your daughter. It can be school fees, either tuition fees, anything. Yes, and this money you have taken from business, from the capital that you have invested. You have brought 24,000. Anything the owner brings, you are the owner for now, that you have to consider. Yes. So this is the capital. This is drawings. You have brought 24,000 and you have withdrawn 4,000 from the same. So what is the amount of capital now? It is 20,000. Yes. So drawings always results in the reduction of capital. Yeah. Capital is anything that is brought by the owner, and drawings is an amount or goods withdrawn by the owner for personal use from the business. Yes. And the amount is the amount withdrawn is deducted from the capital, and that is the reason drawings results in the reduction of capital. Right? So let us consider the next point. So I hope you are clear with the definition of capital and drawings. Let us quickly revise it once. Okay, capital. You are the owner of the business, or else you are a person who is willing to start a business activity. What do you need at first step? You need money. Yes, so money, that an investment you need. So that investment for the purpose of business is capital. Yes, and the amount that you have invested in capital, that you have brought in business, is capital. Yeah, and the amount that you have withdrawn for your personal use is drawings. The amount that you have withdrawn from business for your personal use, you can also withdraw the goods, assets, or anything. Yes, but once you are taking these things for your personal use, it is termed as drawings. Yes? Fine, then we are done with the two new definitions for today, of which first is capital and second is drawings. All right? Okay. Now, the next topic that we are going to consider is of liability. Okay, so again an important topic. So firstly, we've understood that capital is required for starting up a business. Say for example, you have invested 50,000. Then drawings is anything that you withdraw from business for your personal use, and you have withdrawn rupees 10,000 overall. So your capital becomes 40,000. Okay? Fine. This is a business activity. Okay? Obviously, money is at center for conducting a business activity. You are in need of money still, but you don't have it with you. What you're going to do? You are going to borrow the same. Yeah? So you will be borrowing it from outsiders, from any other person, any institute, bank. So, bank. Bank is an institute who is going to provide you money, who is going to lend you a loan. You understand the meaning of loan, yes? The borrowed money. Yeah? You have taken loan from a bank, yeah, for say 5 years. What does that mean? You have taken a loan of rupees 80,000. Yeah, this is the amount of loan. Loan means a borrowed money. You have borrowed rupees 80,000 from bank. Yes? Now this 80,000 rupees are to be returned back to bank with due period of time, predetermined time. Yes, that means this is the borrowed money from bank, rupees 80,000. This is not your money, this is the borrowed money. You are going to return this later in future. This becomes a liability of business. Yes, anything that is to be paid, yes, is a liability. Okay? Also the credit transaction that we have understood, yeah? The 5,000 and 5,000, if you remember, 10,000 rupees was the bill, 5,000 was paid on the spot, remaining 5,000 is to be paid later. So that is the liability of that person towards us. In short, anything that is left to be paid, anything that is to be paid to any other person, yes, is a liability. Yeah? So it has several types on the basis of time and on the basis of relation. Yes, but keep one thing clear in your mind, that you are the owner and business is yours. Whenever you understand any sort of definitions, any concept that you study related to accounting, always consider that you are the owner and business is yours. Yes? So I will consider liability from my point of view. You will consider it from your point of view. Okay? While understanding. Yes. So let us understand the meaning of liability and its types. Okay, so the definition of liability is given here on page number 12 of your textbook. It is amount payable by the business for credit purchase of goods, assets, or amount payable for borrowed money is known as liability. This is the definition that I am reading in the textbook. I repeat, amount payable by the business for credit purchase of goods, assets, or amount payable for borrowed money is known as liability. You have purchased goods on credit. Yes? Say for example, you are a person conducting a business activity in Bhavnagar. But the stock that you create at your shop or at the place of your work, you bring it from Rajkot or Ahmedabad, say. Yes? So this is a very common thing. If you are helping your father in the business activity, you might be aware of this point. Otherwise, obviously, your father must be visiting at different places for a purchase of stock. Any of your father, if he is involved in such business activity. Yes? So, you are having a shop of school bags. Yeah? So, you need to have sufficient stock for the same at first. Yeah? So, what we are going to do is that you will visit Ahmedabad or Rajkot or at any place for creation of sufficient stock at your place. Yes? So once the customer visits your shop, should have ample of choice available. Yes? For that you need to create a proper stock at your place. And where do you purchase this stock from? From other cities. Yes? So say for example, you visited some other city for purchase of that particular stock. Yeah? So you visited some other city for purchase of that particular stock that you are going to create in your working place, I mean at your workplace of your work, or the shop that you have, the place of your business. Yes? So what happens now? Understand this. You visited some city, say Ahmedabad, yeah, and you have purchased a stock of school bags. Yeah. So the bill amounted to rupees 60,000. You have purchased a stock worth rupees 60,000. Yes. So you have paid this amount in cash. So this becomes directly the cash transaction, or say cash purchase. Yes, just after a month or two, you again visited and the bill amounted to 1,20,000. Yes, now understand. 1,20,000